Hi guys, Jamie here from Elite Forex Signals. We're just going to go over a quick strategy for you to possibly implement within your trading strategies or trading style, and it can be a day, intraday, and even swing style. But mainly with this strategy, the impulse pullback, it's going to be intraday, day, and scalping. Okay. So what we're going to do first of all is top-down analysis from the weekly. Okay. So it's very important to look on the weekly chart so you can see key levels of support and resistance and where price is previously respected, and then it can give you an indication obviously from that point whether you're going to have a barrier or not. It's always good to go on the higher time frames and just jot down different levels that have been respected. You can see this level here has had a few touches, but a key factor in play now is we've got a break below the 200 moving average. Okay, so we are on the weekly here now at the moment, and we're just going to put in some levels, and this will give us a better understanding of where the price could go. Okay, so the EMAs that we're using, we've got the 200 EMA here, and then we've got the 50 EMA, and then we're going to have the 18 EMA, and then finally, last but not least, we're going to have the 6 EMA. Okay, so you want to do the top down. Once you've done your top down analysis, you want a nice flowing chart of EMAs. You don't want too much touching of the 200 or even the 50. You want it to be flowing nicely, and we can get away with it in this case here. And what you want to be looking for, okay, on the lower time frames now, so we're going to drop down. You want to be seeing solid price action dropping down like this. Okay, so on your hourly chart or even the 15-minute, depending on which style you want to go for, day or scalping, you want to be looking for a nice flow like this. This is a perfect example here. Okay, so we're currently on the hourly, and you can see price is flowing down very nicely below the moving averages, and you can see it's way below the 200, way below the 50, and it's flowing nicely. Okay, so what you want to be looking for in this case is the pullback. So you've got the cross of the EMAs. Once you have the cross, you then need a rejection candle below the cross, and here we can see the candle has rejected, and that would be our short position back down. Okay, and you could put your stop loss above the swing high of that pullback. Okay, and then you'd take that down to either 1.5 or 2, in this case a nice 1.5 risk ratio, and you've taken your profit. So you want to be looking for that cross of the EMAs with a rejection candle like this back down to previous lows. Okay, and that would have been a nice trade to enter. Don't enter the trade if it's broken the 200 EMA like this. So later on it did break, and although it did continue going down, it would break the rules of this strategy if you were to enter a sell here because it's broken the 200 EMA. Okay, with the 50 it's fine. It would be a much stronger signal if the cross was with the lower EMAs and not the 50, but you can still enter on a less than strict strategy on the impulse pullback if you do see a cross on the 50 moving average as well, but definitely not the 200 moving average. If you want to be super strict with this system, then you can also implement the 50 EMA rule. So if the price does cross the 50 EMA, you won't enter, and you'll only look for the lower period EMAs, so the 6, and then you've got the 18. So yeah guys, if you want to learn more strategies, we teach you everything you need to know in our course. We teach you many different strategies. This is just one basic system that is very nice and easy for beginners to understand. If you want to select your package and become a member of our VIP team, we send out our signals in our VIP group, and we are happy to have you on board. We'll see you soon guys.